Good morning, everybody. Today is October 7th, 2021. We've got three charts for a quick review, and we'll just jump right in. First, I wanted to go over interest rates. The 10-year Treasury, U.S. Treasury, is what we use to just monitor general interest rates. This chart goes back to 1994, and we can see the decline. This is 8%. We can see the decline in the last 30 years of interest rates. Now, interest rates are the wobbly blue line as they fluctuate every day in the marketplace. These lines are these are sort of permanent lines I have on my screen because this tracks the trend. These are trend lines. These lines are areas of support and resistance on interest rates because we're trying to look at what interest rates have done to maybe get an idea of what they might do. Now, here is COVID. Interest rates collapsed to basically 0.5% on the 10-year U.S. Treasury bond. That means you could buy a bond coming due in 10 years, and that's what it would have given you at this point, about 0.5%. Right now, we're at 1.55 approximately. Now, we're going to talk about this in a minute. I want you to notice how interest rates collapsed during COVID and the price of gold went up during this collapse. Interest rates have risen and the price of gold has gone down. So keep that in mind. Rates down, gold up. Rates up, gold down. But anyway, these long-term trend lines are resistance. I drew them in red. They are resistance. We feel like that the 10-year Treasury bond yields may be hung here around 1.5. This is 1.5 approximately where we are now. 175 is an area approximately of resistance. Hard for it to get through these lines. And then this real long trend line. This really goes back 35, 40 years of declining rates. Hard for it to get through there. It's going to bump its head right in here somewhere, we think. So we look for interest rates, unless something very dramatic happens, we look for interest rates to honor these lines and not be able to get through here. Now, if it does, again, this is what we think. We don't know anything, and it can get above from time to time. It can get above these lines. These lines are not the law. It's not a rule. These are just support and resistance lines. We think it'll have trouble getting through here. So it's kind of hung in here in a channel, we think. We don't look for interest rates to spike up. I also wanted to mention, I've been trying to remind everybody, the U.S. 10-year Treasury bond is around 1.5% positive. But look, I've been trying to tell everybody, remember around the world in different places, in Germany, it's negative 0.183%. That's a negative interest rate. In Japan, it's negative 0.077%. So negative interest rates in different parts of the country, of the world. That's why American rates look so good to people around the world. So we're at 1.5 on the 10-year Treasury, negative rates in Germany, negative rates in Japan. Let's go to the next slide. This is the stock market that everybody's interested in. Now, I drew this early this morning before the market opened, but we're going to talk about some trends. This is a very short-term chart. This is August, September. Now we're in October. And you can see that the general trend, short-term trend, has been down. Again, these red lines are lines I've drawn of support, of resistance, hard to get through. This goes back to August. This was the low in August. Then in September, you remember, we had a kind of a swooning effect here that bounced right back. Then sort of another swoon. Now, this is where we were this morning or at yesterday's close. Now, it has attacked this line. And in fact, it is punching hard against this line this morning. Right up in here and all this resistance. Since I drew these lines, the market is opened, bumped right up in here. This is where it's trading right now. So we feel like these lines of resistance will win the day, and in fact will come back down in here. Now this is right below 4,300 on the S&P 500 is where support is, right down in here. Didn't draw that line, but you can see where I get that. That's where we think support is in the near term. So attacking these lines right near, in fact, right up above these lines this morning, but we feel like the weight of these lines will push it back down in here. Again, these are just indicators. This is not the law. This is not a rule. This is just long-term support and resistance lines. This resistant line goes back to August. Again, this is a pretty short-term chart. Now I want to go over gold. A lot of us have gold and silver. Remember, we talked about interest rates going down, and it's very hard to see. I apologize. I sort of cut off the dates here, but this is where this blue line is the price of gold. You know, and you can see as interest rates went down after the great financial crisis, gold went up. And then we kind of swoon. Now this pattern, this is resistance here, here's where we actually are, right about 1750. Now right before COVID hit, we, or during COVID, I should say, interest rates went down and gold went up, and it's been sagging ever since. Gold and silver have not had a good year this year. You can see from this chart, gold has come down. Now this is going into, this gray area is going into next year. You can see we're getting closer to next year. This is 2022. And we think this is known as a cup and handle, and you can see why. This is the cup, this is the handle. This is a cup and handle formation. This is generally thought to be a bullish formation, technical formation. So we think that this cup and handle pattern will continue. And you can see it's generally followed this. This is the handle. And this is long, this is blue, long-term support here. Long-term support going back. This is resistance right here. This is resistance right above where we are. So we think that gold will ultimately, in the first half of next year, come through this and rise simply because of the long-term trend and this part of the formation here. So we think gold is in a cup and handle technical formation with some long-term support, goes back several years, and we think that it will honor these lines and generally rise in the first half of 2022 and hopefully back to all-time highs. So that's why we're hanging on to gold and silver. Don't really like owning gold and silver. However, we feel like it's appropriate due to the world's stance towards debt, credit, and money printing. We think that it calls for it. And so hopefully one day we'll be able to exit our gold and silver with a nice profit. Well, that's certainly what we intend to do. So that's just 3 charts. Wanted to give you a quick update. Haven't given you one in a while. 3 charts that we watch closely. Thanks a lot.